Welcome back. Let's now look at the commodities market, where the crude oil rose for a sixth consecutive session following decline in U.S. production, lifting the commodity off pressures from a global oversupply. The U.S. Energy Information Administration says crude stocks rose 118,000 barrels last week, while weekly production declined 100,000 barrels per day to 9.3 million barrels per day, the biggest decline in weekly output since July 2016. In early trades, U.S. West Texas Intermediate climbed 0.2% to $44.81 per barrel, matching Wednesday's peak price, which was highest since June 19, while the Brent gained 0.2% to $47.39 a barrel. Prices were also underpinned after data showed another strong drawdown in inventories in the U.S. And for more on the oil market, let's bring in Desola Simoni, research analyst with Financial Derivatives Company here in Lagos. Hello, Desola. Good afternoon. Thank you very much for joining us.
Good afternoon, Chimizi.
The oil market has been quite volatile lately. What's your take in the current trend?
Oh, yes, like you rightly said, in the past couple of months, mainly driven by increases in U.S. stock U.S. production. Like you rightly said also, last week, the global oil markets slid into bear territory because of a larger than expected build-up in U.S. crude production and U.S. rig counts, and this caused the global oil prices to plunge to a 10-month low of $45 per barrel.
Now, we see oil prices inching up after reaching a 10-month low, just as you said last week. Is it just about the recent decline in U.S. production, or there is more to it?
Like I said, it's mainly driven by activity in the U.S., the production and the crude stockpiles. Like you also rightly said, because July is usually the commencement of U.S. driving season, and so we've seen a slow pickup. We've seen a slow pickup in demand for gasoline. Like the data from AIA showed that gasoline stockpiles declined by approximately 1,000 barrels. So that shows that the driving season has commenced and there's high demand for it, and this is a seasonal event, so it's not unexpected at this time.
Now, with this decline in U.S. oil production, do you think OPEC should relax or more should be done to control oversupply?
This is, except the decline is sustained, I don't think OPEC should do anything at this time, because last week we had a unexpected increase in crude stock production. This week now is a unexpected decline, or a large decline. So I think that for now, OPEC, there's going to be a meeting in Russia next month, but I don't think OPEC is going to do anything about their policy at this time, because of the market is still very volatile.
So with the implementation of the 2017 budget, that's talking about Nigeria, what does this now mean for the country?
Like we all know, oil is very significant for Nigeria's fiscal policy and even our monetary policy as it stands. They recently signed 2017 budget. The proposed revenue is around 5 trillion naira, and of that, 40% is expected from oil revenues. So this shows how important oil is to our budget and even for our monetary policy, our foreign currency interventions. So if oil prices continue to increase, let's assume we continue to see maybe a decline in gasoline stockpiles in the U.S. And a decline in U.S. production, maybe for maintenance or whatever reason, and the oil prices continue rising, this would be good for us, because at least we can meet our revenue targets.
All right, thank you very much, Desola, for your time. Desola Simoni is a research analyst with Financial Derivatives Company. We move on now. The World Bank expects Zambia's economy to grow by 4.1% in 2017 and by close to 5% by 2019. However, the global lender has also warned that stricter spending controls were needed to ease the country's large debt burden. The World Bank, in its report, says the government has started to reduce the large stock of expenditure arrears, but further efforts are needed to improve budgetary controls and better withstand fiscal pressures if the national debt is to remain at sustainable levels. And Ghana has signed a $10 billion memorandum of understanding with China to develop its bauxite industry. Our growth in the West African country slowed sharply in 2014 due to a fiscal crisis and tumbling commodity prices following years of economic expansion of around 8% on the back of gold, cocoa and oil exports. Taking office in January, President Nana Akufo-Addo has outlined a program of job creation through the private sector and rural development. The funds from Beijing would contribute towards building 1,400 kilometers of planned 4,000-kilometer railway network, which would connect bauxite mines and production sites, as well as establish a rail link into neighboring Burkina Faso. And Anglo Gold Ashanti plans to lay off 8,500 workers, representing some 30% of its workforce. The biggest gold miner in Africa says the plan is critical for the business sustainability and majority of the workforce. Anglo Gold's South African mining operations had experienced heavy and ultimately sustainable losses in recent times. The company, which employs 28,000 people, says the potential job cut is part of its efforts to improve production and the cost base of its South African business. In May, Anglo Gold reported a 16% fall in first quarter profits following a decline in South African production, and said it was reviewing its operations to restore margins and ensure their recovery. Anglo shares fell 4.29% to a little above 132 Rand in the previous trading session. And the United Nations is advocating a business-friendly environment for small and medium-scale enterprises in view of the UN Sustainable Development Goals. The National Information Officer for United Nations in Nigeria, Sheyi Shoromeko, made this call at a forum organized by the Lagos Chamber of Commerce and Industry in commemoration of the World SME Day. That's it on the program for today. Thank you very much for watching. I'm Chimizi Obi Iwagu.